can analyze the markets, look for possible trading opportunities, and we'll then talk around that afterwards. So as usual, we'll start with the economic calendar. Today is Monday, the 19th of October. Sorry, Tuesday the 19th of October. So we see we've got these reports of low importance, so we can ignore them. And we've got these reports of medium importance, which we need to read and find out what they're about. So at 9 a.m. GMT time, we've got 3 European reports coming out: the Eurozone, the Euro-German, current situation and economic sentiment reports. So that might have an impact on the market, and also especially the Euro-US dollar. So be aware that's going to be coming out at 9 a.m. GMT time, which is 10 a.m. UK time. So we ignore those ones of low importance, and then we've got this report at 12:30 GMT time, which is 1:30 UK time, the US housing stats. Again, although this is of medium importance, but because it's anything to do with the housing market, can affect the market. So again, you have to be aware of that report at 1:30 UK time. Because there are certain reports, anything to do with unemployment, anything to do with housing, as you all saw from the housing market crash that started the whole recession in the first place. So unemployment figures, housing data, obviously interest rates, consumer price index, all the sort of GDP, sort of important reports. Anything that can potentially affect the economy would obviously have an impact on our trading. So that's at 1:30. Then we've got the Canadian bank rate decision. That's at 1 p.m. GMT time, which is 2 p.m. our time. Again, that will especially impact anyone trading the Canadian dollar. So if you're trading the Canadian dollar, you'll be aware about that. But if you're not trading the Canadian dollar, then that won't have such a huge impact on other markets. But any currency paired with the Canadian dollar will be affected by the Canada rates decision. And there are no more reports of importance following that. So with that in mind, we already have an idea when things might change in the market. At 9 a.m. GMT time, 1:30 UK time or 12:30 GMT time, we have the housing stats. And with this housing stats, because it's a US report, then that tends to have a huge impact on most of the markets. Again, you remember when America sneezes, the whole world catches a cold. So usually reports from America tend to have more of an impact, a widespread impact than other reports. So be aware of those reports coming out. And then obviously the Canada rate decision if you're trading the Canadian dollar. Okay, so with that in mind, we'll go to our charts. We'll primarily look at pound dollar and euro dollar to start with, and then we can take questions on other markets for those who are trading other markets afterwards. So as usual, we'll start with the overall view of the market, going on the 1-year daily chart. So this is the Euro-US dollar market. This is the Euro-US dollar. That's the 1-year daily chart. And you can see here when the market initially took off, broke the Fibonacci retracement there, the 38.2% retracement. A few of us took a swing trade there, and we're still in the market from the swing trades. You can see we're almost at the target of the next retracement. And the market has been making higher highs, higher lows since then, which is the mark of an uptrending market. So you can see we made a high there, then a new high, and a new high, a new high, a new high, and another new high. And then you can see the lows. That's one low, a higher low, a higher low, a higher low, a higher low, and so far that low is still higher than the previous low. So the market has been making higher highs and higher lows, which is a mark of a good uptrending market. And luckily you can see it's got close to the Fibonacci retracement and then it's pulled back. So we will be hoping that if it breaks that high, chances are it will break the Fibonacci retracement and keep going up. And so that's a potential point for swing trade in the Euro-US dollar at the 23.6% retracement. So we can buy a swing trade there to buy if the market breaks that Fibonacci retracement. So that's a swing trade opportunity for the Euro-US dollar. We'll now come down to the day trade. So as we can see, again, we can see the market went up yesterday, got to a high point there, and then started to fall, went sideways, started going up again, and it's made a high there. You just mark that high. So the high there is 14,003.8, so round that up to 14,004. So it's made a high there, and that's the current low point now in the market. So the low there is 13,896. So that's where we are now with the Euro-US dollar. So you can see the market, that's the most recent high in the market, and that's the most recent low in the market. And we know that the Euro report is due out at 9 a.m. GMT time. So in view of the fact that the pivot point here at the moment is trading, is in between the sideways trend of the market, you have to be careful using it. One, the pivot point is in between a sideways trend, and two, the moving average 50 is above the pivot point. So at the moment you can't use that as a point of entry into the market for two reasons. And also the third reason is there's a report due out at 10 a.m. UK time, which will affect the Euro-US dollar. So with that in mind, the best place to place your trade will be just above the first resistance for now. The first resistance you can see is at 14,012, so we can place a buy order just above that at 14,014, and a sell order just below the first support. You can see the first support is at 13,845, so you can sell at 13,843. So that's the best place to place your trades now. At 10 a.m. UK time, obviously things could change, and depending on what the market looks like at that time, you can then decide to change your points of entry in the market. So this is the sort of trading opportunity you have now. If you had been up at midnight and because you couldn't sleep and you were up, you could have placed a sell order at that time just below the pivot point at 13,920 with your stop loss of 20 points. So that would have been 13,940. So you would have been taken into the market there and probably been taken out there with a loss of 20 points. But that's if you had been trading overnight. And obviously that would have been your first trade. You could have sold again a second time, but again, that's if you've been up all night and you're an insomniac. But going by this morning's pattern of the market, these are the best places to place your trades for now, just above the first resistance and just below the first support. And then at 10 o'clock, depending on how the market looks, you could then change your positions, because if by 10 o'clock the market had descended close to the first support and the moving average is now below the pivot point, you can now use the pivot points to buy. Let's go to the pound dollar. So you can see the pound dollar is trading in between the 38.2% Fibonacci retracement and the 23.6% Fibonacci retracement. So in terms of swing trading, it's quite straightforward. You can either buy when the market gets to that retracement or sell if it drops and breaks the 23.6% retracement. And you can now see it's right in between those two retracements. Now, from a day trading point of view, again, it's always good to first establish the trend of the market. You can see the market's been trending sideways. You can see that's the most recent low point of the market at 15,837, and that's the most recent high point. And the high there is 15,943. Okay, so again, we can see the pivot point is in between this sideways trend. But in view of the fact we haven't placed any trade on this market today, and the market has descended close to the previous low, in this instance, we could now use the pivot point to buy just above the pivot point, because you can see the moving average 50 below the pivot point. So you always remember you buy above the moving average 50 and you sell below the moving average 50. So because the pivot point is above the moving average 50 now, you can now use that as a point of entry in the market at 15,913. Because, like I said, the market has descended quite a distance below the pivot point. The moving average 50 is below the pivot point and is getting close to the previous low of the market. So now we can now use the pivot point to buy, and then to sell, you can see the first support is way below the previous low of the market. And again, we can use that to sell just below the first support at 15,816, 2 points below the first support. Obviously, the market falls close to that and that support level holds. So the market gets close to that and goes back up and the support holds, then we could then use that as a point of entry in the market. So those are the possible trading options now. Like I said, they could all change at 10 o'clock.